watching FII. Now, SEBI has changed the definition of the multi-cap schemes offered by mutual funds in a move that could trigger a churn of estimated 65,000 crore in the stock market. Huge amount, right? When obviously the mutual fund managers, investment firms and the common man who's put in his hard-earned money in the stock market and mutual funds is worried. So on FII today, we decode these changes for you. And if you are one of those who's invested money in the stock market or in the multi-cap scheme, you should listen hard to this one. Let's first tell you the big question we'll be answering for you on the show today. We will tell you what is the old definition and what's the new one that the SEBI has ordered. What impact will this have on your hard-earned investments? What will it have on your stocks? And thus, what strategy should you really adopt? Let's first begin by telling you what are really multi-cap funds. Now, this is classified as an equity fund that invests in a combination of small, medium and large cap stocks. Now, under the existing rule of the multi-cap funds, that's what it was before the order came in, a minimum of 65% investment should happen in equity, that is the stock market. The rest can go in the debt market. Now, in the stock market fund, the manager or your investment manager has the freedom to allocate money in large, medium and small caps at his or her will. But now, under the new rules that the SEBI has underlined, SEBI says that multi-cap funds should look like multi-cap funds. That is, equal allocation should happen across large, medium and small cap stocks. Effectively saying that 25% of the funds in large caps, 25% in medium, 25% in small cap. The fund manager gets flexibility of only with that remaining 25%, basically not giving them enough elbow room to choose and pick from. Now, you must be wondering, why did the SEBI come up with a rule like this? Now, to understand that better, let's look at the fund allocation of existing multi-cap funds. Now, we'll just bring out that graphic on the screen also for you that will help you see why and what are the changes that we're actually looking at. Now, if you look at the graphic that I believe my producers will just be putting out, the table graph that gives you the top 5, yeah, that's the one I'm talking about. Now, you will see how mostly towards the large caps, the blue chips, or what are considered safe bets, most of the allocation happens in these. Now, what we've put out for you are the top 5 mutual funds. This table, you can see 65% of the allocation are in the large caps, almost 20% in mid caps and just about 5 to 8% in the small cap. I'm talking about the last line on that screen. Now, this is the variation between the allocation that the SEBI wants to break. So, there are two arguments on this really. The fund managers say this leaves them with no flexibility for the fund management. As an investor in the multi-cap fund, your view while investing would have been that the fund manager will invest freely in companies of their choice. It could be based on what's happening in the stocks market, what's happening with the valuation of each of the categories, the volatility, geopolitics, domestic events, etc. This would have helped the fund managers maximize returns while managing risk as well. But the SEBI believes at this point that this will bring adequate exposure to the mid-cap or the small-cap stocks to ensure that no over-concentration of investment is taking place in the large-cap stocks. However, this argument by SEBI has not satisfied a lot of people. Now, let's go across to Sakshi now, who now explains to us why the SEBI felt the need for a change like this. Sakshi?
So why has the Securities and Exchange Board of India come out with new rules that are likely to benefit small and mid-cap companies? The key reasons for such a move seem to begin with the need to ensure that funds are true to their label and reduce the bias towards large companies. Experts suggest true to value does not just mean a 25% equal weightage and in fact can also be used in accordance with the proportion of value for the varied small, mid and large cap funds. Now, SEBI's rationale also seems to suggest that rebalancing the portfolio is only one such option investors can use and consider, but they must also consider merging and changing the label of their schemes. So in a sense, SEBI feels this move can boost transparency and fairness in the system in the long run.
All right, so for now, by January 31st, 2021, the changes will have to be implemented. The next logical question then is this good for your investment? Well, one way to look at it, that there are other funds available in the market as well. Some which only invest in large caps, and that could invest, there is where you could invest, or you could look at a multi-cap now as a new product altogether. The choice, the SEBI would like to tell you, remains to be with you. The problem, however, that investors have with this new definition is that they believe this will heighten the market volatility. It could lower returns, and the biggest impact they feel will be on the stock market. Let's look at that third point in detail now. What is the impact that they actually see of this move coming in and bringing in on the stock market? Now, the experts believe that there will be an outflow of money from large cap to medium and small caps. Maximum will go to small caps. Remember, in the beginning I told you that only about 5 to 8% allocation at the moment is happening in the small caps. So the largest chunk of shift will take place there. Now, experts estimate that between 35,000 crore to 50,000 crore may flow into small and mid caps after this change. There will be a rally seen in the mid cap and small cap stocks in the short run at least, and it could also lead to, in a way, overvaluation of some small cap stocks because of sudden surge in demand. Now, to understand what is it that the industry is recommending at this point, now that we've managed to tell you what exactly the change is all about, let's bring out the panel that we have for you this morning. We've got Sunil Subramanian. He's the MD for Sundaran Asset Management Company Limited. We have Shanay Aras. He is a partner at Credel Capital. We also have Abhishek. He is now an independent financial advisor, earlier worked with Kotak as well. And we will be joined by JN Gupta. He's a former executive director for SEBI. Thank you, gentlemen, for joining us this morning. Let me first begin by asking Mr. Sunil Subramaniam, there. So first up, what do you believe will be the immediate short-term and long-term impact that a change like this will bring?
So there'll be two changes, rather three changes. So there's the fund management industry on the one side, there's the investor stroke advisor on the other side, and then the third side there is the stock market. So what this will mean is that, first of all, from a fund management industry perspective, like you mentioned, since SEBI had given the freedom to the multi-caps earlier, they had predominantly put in large cap, given their view of the economy and the way the COVID crisis and the pandemic had affected it, and the fact that smaller and mid-cap companies were more damaged in terms of their business because of the pandemic and the slowdown in the economy. So they naturally wanted to act in the best interest of the investor by putting the money into large caps at this point, and they retained the flexibility to add small and mids as the situation, as a V-shaped recovery is expected, they would have added. That was their thought process. Now, what SEBI has done is that now they are forcing the fund managers to stock up on small and mid now, or alternatively, they are given, as their press release says, the option to either merge their funds into their large cap or large and mid cap category, or to continue to follow the new guidelines there is. So I suspect that most of the industry would seek to either merge their funds. If they don't have a large cap fund, they would rename this fund as large cap. There's another interesting category called large and mid cap, which says minimum 35% in mid cap and minimum 35% in large cap. That's more closely aligned to the current portfolios of multi-cap funds, and I think that is a natural place where this could migrate. The second option that they would do, and this comes from the investor perspective, because my understanding is advisors and investors were well aware of the portfolio of these funds, and these funds have been large cap oriented for quite a long time. They were well aware and they invested with that in mind, which means advisors and investors of theirs looked at this as a safety oriented flexi cap at this point, which can take on small and mid later, and they were free then to either remain in the fund or to move out. So I think there was a clear transparency as far as the advisor, investor and the fund managers were concerned. So now the fund manager will request the advisors and the investors saying, are you in alignment with the new SEBI guidelines, or would you like to switch to our own large cap or large and mid cap fund? So that's where the investors have to make a choice, saying did they want the flexibility with a later ability to add, or did they want to remain in a large cap?
Sir, then
so I think that's the investor.
And what do you think the likely choice is going to be? We are expecting a lot of money to be flowing out of the large caps or is that an overestimation at this point?
I think that's an overestimation. You mentioned that about 40,000 crores in all. I think that will be 1/3 the amount. Because to the extent a fund renames itself, there is no need to change the portfolio. To the extent that a fund merges itself, it is an inter-scheme transfer within the AMC. So there is no market impact. Only to the extent a fund chooses to remain a multi-cap, right, which I roughly expect 1/3 of the industry to do, will that, so instead of that 40,000 crore, I expect between 10 and 15,000 crores to be shifted out of large caps into small and mid caps, and it won't have negligible impact on the large cap because the free float of large caps is humongous and this is nothing. Whereas in the mid and small caps, there will be a short-term bounce back rally because suddenly you will have mutual fund managers seeking good quality companies. So I think that one clarification is that there will be a rally in small and mid cap, but in those which are good quality in terms, their valuations have been affected because of the cyclicality of their business, but when the cycle turns, they will benefit. So I think there will be a pickup in small and mid cap.
Right, let me bring in Shanay at this point. Shanay, then why exactly are the investors so worried? We've seen trends online and everybody coming out and saying, well, this is not on.
So, as Mr. Sunil rightly said, what's important to understand is that investors shouldn't be playing to their sentiment. As soon as the ruling came out, everyone was completely worried and wanted to move out of multi-caps. There were messages floating saying, what should we do? Because the risk appetite is suddenly doubled up for someone who was looking at a conservative mandate with a multi-cap fund.
Okay, I'm just going to pause there for a minute, Shanay. I believe we have a problem with your audio. I'm just going to have the production team fix that. Let me take that question to Abhishek in the meantime. Abhishek, you are somebody who deals with people firsthand, and this is the time, these are COVID times. I cannot emphasize enough on this, where people are already very edgy about their savings. And perhaps the reason why we've seen the sort of reaction come out against this change as well. What is it that you're picking up from investors at this point, and what do you guide them then?
You see, being a financial advisor, our role is to take them through different patches and these kind of policy changes which comes up from time to time. So our role is much more critical because we have to take into account everything that what is the regulation talking about and how the investor should be aligning their portfolio going further according to the changes. Okay.
So what is your advice to them right now?
My advice, if they are senior citizens, the senior lot of the investors who has some kitty of exposure into multi-cap stocks per se, they should be moving out and reducing their exposure into these kind of funds. And going further, they will be adding much more. Hello.
Yeah, go ahead, Abhishek. We can hear you.
They will be adding much more greater chunk of investments towards the large cap portfolio. Okay. Considering the fact that these changes will be implemented by January 31st next year. Okay. There will be some knee-jerk reaction which will be seen into the large cap portfolios of these multi-cap funds.
Around that time only?
Around these times there will be some knee-jerk reaction which might be seen in some specific funds. Okay, but I totally agree with Mr. Subramaniam that the level of extent of that realignment would be much lesser than what is being talked about of 40,000 crores or that kind of a number. It is not going to be that much. Okay, and long term it will be much more broader, and it is for the betterment of the industry and the stock market, because there will be a broader distribution of funds along the market capitalization, which I personally that is a healthy sign for the stock markets going further.
Healthy sign for the stock market. Okay, I'll take it from there. We also have Mr. Jain Gupta join us. He's the former executive director for SEBI. Thank you so much for speaking with NDTV, sir. Your perspective on why did the need arise in the first place? Just take us through what was SEBI really thinking, or what in your opinion was SEBI thinking to bring out a change like this?
Thank you. First of all, I would not be able to tell you what SEBI was thinking, because I'm not in SEBI at present and I don't know what were the things, but I would say very simply, the transparency is the buzzword that is to be followed. And what happens when the fair labeling is concerned, when what SEBI is saying, is very simple. When you say multi-cap, so multi-cap is, that means that you have got scripts or you have got shares which belongs to multiple classes, that is large cap, mid cap, small cap, and whatever you may say. So that is one thing, that in order to reflect the name and the content behind it, there has to be fair labeling. That is one part. Because what happens when you sell multivitamin, you can't sell only vitamin A 99% and vitamin B, C, D into 1%. So in order to have fair labeling, it has to be done.
Okay.
But then the issue is that what is the right mix? Now when you say 25, 25, 25, you are ignoring the fact that the market is not divided into 25, 25, 25. The market, the whole entire market capitalization is 80% or 70 to 80% of large cap, 10 to 15 or 20% of mid cap, and 5 to 10% of small cap. So what would be the best fair labeling is that the portfolio should reflect the percentage of the market cap. So if today we say that 80% is the mid cap or large cap, 15% is the mid cap, and 5% is the small cap, so the portfolio of multi-cap should reflect somewhere between 80, 15 and 5%. Now what is going to happen is, if this rule continues as 25%, 25%, 25%, which in my opinion does not take into the account the reality of the total composition of Indian market, as the most of the mutual funds will change the schemes and comply and make it large cap scheme. But the real problem that is going to happen is, if this is being implemented and it is insisted, it will cause harm to the investors.
Right.
The reason is that small cap have very low liquidity and it is very difficult to find good quality small cap. The beta of those companies is very high. The risk of the investor will be very high. So it will be problematic for investors to have a exposure in multi-cap. The other problem that will happen is, if you have seen the past history, many mutual funds have a small cap scheme, but after some time they stop taking subscription in small cap scheme because they find that they are not able to invest enough funds in a small cap because those small caps are not available.
All right.
So that problem will happen. The other problem that is there, that unfortunately, even today, many of those obscure companies, there is liquidity problem. The second is their shareholding, although it may appear that the public float is very high, but in reality, most of the public float is logged into the friends and relatives who never sell. So if you have to really see, you will see what is the historical shareholding pattern, and you will find, like Qutub Minar, that shareholding pattern has not changed for last 30, 40 years. So there the problem would be. So I would say the SEBI would probably reconsider it and make a change to reflect the real composition of market into the multi-cap.
All right, some very interesting comments over there. Let me take that for a rebuttal to Mr. Sunil Subramaniam. You want to respond to that?
Absolutely. So I think I partially agree with what Mr. Gupta said. That this new classification does not reflect the market's breakup. But that is precisely SEBI's point. See, if you look at it today, the economy, if you look at it, the large cap companies are just the top 100. The mid caps are the next 150. But Indian economy is not just 250 companies. So if the capital markets are to truly play their part in the development of the country, the broader market, like an S&P 500 index in the US, has to play its part in supporting. And capital markets are critical source of capital for mid and small cap companies, for new startups who want to list. So unless a healthy player, see today what has happened is, after March 31st, you see a bounce back already happened before the SEBI thing. That is because a lot of Robin Hood investors, first time investors, more than 200,000 demat accounts have been opened in this period. So people who are working from home, have a lot of money, are buying all kinds of penny stocks, and the wrong part of the market is going up. But a mutual fund, because of its research, because of its diversification capability, will buy the good quality small caps which are today crying for want of liquidity.
Well, that was precisely my worry. If a lot of money actually people sitting at home are investing, a lot of them for the first time in this pandemic time as well. So how will they make that distinction really? Let me take that. We have Shanay back with us, hopefully with a better audio line this time around. Shanay, you were making your point earlier. We've been discussing while you were gone about how Mr. Gupta really believes that this does not really solve the purpose of, of a balanced out approach that the SEBI perhaps, or a more transparent approach that the SEBI perhaps is trying to look at.
So, like I said, in my opinion, SEBI has come out with this ruling, like Mr. Sunil also rightly said, to create depth in the middle small cap markets to start with, which were really suffering with liquidity. And of course, the small caps, particularly, which have been languishing for the past 3 years. And of course, to also change the fact that multi-caps in the past, rather most of them, given the uncertainty because of the virus, were predominantly holding between 60% to about 85% of assets in large caps, right? So what we had done, or rather what most investment advisors have also told their clients at the time, is to look at multi-caps as some sort of a diversification to a large cap portfolio, but with minimal volatility compared to a pure mid or a small cap strategy, which could take part in the portfolios purely basis asset allocation. Now, what this does is obviously investors who are worried about having about 50% of their portfolios allocated towards mid and small caps are going to face some sort of a concern with the new ruling. Which will, of course, have them move to, as was said, to pure large cap funds or large and mid cap funds where they can take about 65% of an allocation to large caps. Having said that, what I personally feel is that this will result in some sort of a self-balancing act because, as Mr. Sunil said, instead of about 40,000 crores, I don't see too much money moving into the mid and small cap space. So about 10 to 13,000 crores. And that moving out of the large cap space doesn't really create too much of a deficit there. So a very minimal correction maybe in the near term and small caps rallying to a very small extent. But of course the money, like was said again, a lot of retail investors have started opening demat accounts, trading penny stocks, which have really resulted in wrongful movement of the market.
Right.
And most of this is, of course, liquidity driven as well, because fundamentally you see most of these companies still languishing because of the coronavirus.
Just hold that thought. Just hold that thought for a minute. I also want to bring in Sunil Subramaniam again. So just make us understand, one of the biggest worries here has also been the sort of re-evaluation perhaps the large cap stocks could also see in midst of this change. Is that a worry at this point?
Absolutely not. If you see since April, right, the January to March period is one, and April onwards. April onwards, FIIs have invested 80,000 crores in the Indian stock market to the exclusion of all other emerging countries barring China. So clearly foreigners have a good view of India's demographic dividend, long-term business opportunity from China's aging population and India's growing young population. So I think the large cap space will have adequate liquidity both from FIIs as well as the overall mutual fund corpus today of the 10 lakh crore. My estimate is about 6.5 to 7 lakh crore is in the large cap space. So there is adequate liquidity to buy whatever this 10, 15,000 crores that may come to be sold because of rejigging these portfolios, and that can get absorbed. Large caps make other effects where the uncertainty could lead to FIIs to taking the money out of equities. But that's a very short-term phase. I think that over the medium term, Indian large caps have a very healthy liquidity support. Initial phase of the V-shaped recovery till small and mid caps actually start benefiting from the economy's recovery. Large caps will continue to show better earnings growth, and it's a good space to be in for an 18-24 month perspective in my view. So I'm not sharing your concerns about the large cap space.
All right there, gentlemen, thank you so much for joining us and perhaps putting this entire thing in perspective. There's so much frenzy online about this, so it's good to have it sort of break down for our viewers. Thank you so much for joining us on FII today. We're going to slip into a short break now. On the other side, we bring you the interview that we did with the founder and CEO of Value Research, Harmeendra Kumar. That's coming up on the other side.